Joining me now for a closer look at what's playing itself out in that market scene is Jacobus Brink from the Schmidt Family Office. Jacobus, always a pleasure and a good afternoon to you.
Good afternoon, always a pleasure. Thanks for having me.
Well, Jacobus, brand new week, but I think still very similar themes to what we saw playing themselves out last week. Maybe on the back of that, the jobs data we saw late on Friday afternoon and to what we're seeing today, how are markets faring?
Yeah, well, I think, considering everything seems to be in the green, so it's a good start to the Monday. I think, from a risk-on perspective, we're still pretty much carrying through a little bit from the job numbers on Friday. Dollar bounced a little bit, but nothing too major. And I think, markets are sort of, just waiting on, seeing what's going to happen this week. We've got quite a lot of Fed speakers and most of them voting members on the FOMC speaking. And, the previous sort of time we heard from the FOMC, there was a little bit of more hawkishness. You wouldn't necessarily say that with regards to Chairman Jerome Powell's press conference post the interest rate decision on Wednesday. But yeah, I think the market's sort of in limbo here. We're waiting to see, what's going to be the message from the Fed going forward.
What was very alarming about the last time we heard Jerome Powell speaking, Jacobus, was that, the word interest rate hikes emerged, and he was trying to cool the fears that we might see hikes again. And I'm still trying to figure out when we started to think of hikes again. I thought that was completely out of the, out of the question.
Yeah, no, I mean, that's an interesting one. And you're sort of starting to hear people, bringing up Arthur Burns, and comparing Jerome Powell to him. Obviously he was a little bit quick on the trigger back in the 70s to start out cutting rates. And then we had that massive surge in inflation. And I think that's sort of, coming back into the frame now. I think the other thing that's not great for Chairman Jerome Powell is the fact that he sort of set him up for quite a nice meme going forward with that whole he doesn't see the stag or the inflation part of it. And I think the market is very quick, obviously, to start pricing in rate cuts this year. And inflation has been sticky. You can look at whatever measure you want. Certain economists like Paul Krugman looks at super core inflation that pretty much excludes everything. And even if you look at those, on the rolling 6 and 3 month basis, on an annualized basis, the trend is clearly in the wrong direction for the Fed, So, yeah, I think the whole hike story actually came in, because we haven't really seen that drop in inflation as expected. And that's even on the back of, the base effect from last year, which was actually in favor of inflation coming down. And yeah, I think it's still way too sticky for the Fed's liking. But obviously, being in a political year, you never know. They might even cut once just before the election. Just as a nice to have for the Democrats.
Interesting. We must also talk about what we are seeing out the ECB there, because of course their case for cuts, it's really looking strong. We know the Bank of England will meet later on this week. Jacobus, what are we expecting from that part of the world, and how it might then tie in to what we are seeing with the Fed?
Yeah, it's interesting. I mean, all these central banks typically tend to feed off each other a little bit. But clearly the ECB and the UK, to a large or to a lesser extent, is in a very different position, I think, currently than the US. We've seen real progress being made on the inflation front in the EU, especially also so in the UK, and we've even seen the UK governor come out and say they are pretty much looking at cutting sooner rather than later, and the market's pretty much pricing in a cut for the European Union in June. Which if you look at the current current probabilities of a cut are in June in the US, it's actually very low at this stage. The market's pretty much pricing in the first cut in September, if any. So yeah, clearly the EU is in a very different space than what the US is currently, and we saw saw some PMI numbers out of the EU this morning, and all of those are sort of trending in the right direction, which is completely the opposite of what we're seeing in the US, and I think that's where this whole conversation of stagflation is now once again sort of reared its ugly head. That if you read that with the recent GDP numbers, we saw very strong GDP numbers out in the fourth quarter, 3.4% in the US. It was expected to come out lower, I think 2.3%, but the actual number we saw was 1.6%. So quite a big slowdown in what was expected there. So I think it's going to remain very interesting. But at this stage, probably the EU, looking to cut rates in June already.
Let's also talk about the price of oil. I must ask you, I think it's trading around $83 a barrel. That's very, I think, confusing as well. I'm just keen to get, is this an issue of demand? We know that the OPEC plus countries, prefer to have a bit of a stronger hold on that price, Jacobus. But as we see this price decline, it speaks to me about maybe, issues of demand and a global slowdown, but it could be more colorful than that.
Yeah, no, definitely. I think there's a lot of things that are currently sort of impacting the oil price, and it remains very dynamic. We had some good progress in the ceasefire talks between Hamas and everyone in Egypt, but that seems to have fallen on the wayside again now. Apparently, both parties walked away from the negotiations and didn't really get to any point on that. So at this stage, Israel is very much anti a ceasefire, or pro a ceasefire, but a limited ceasefire, because they are still very much on the point that they want to defeat Hamas before they end this war at all. So that obviously is not great, and I think that's also putting a little bit of a base under oil. So oil, as you mentioned, 1% up again. But once again, if we start seeing demand in the US slowing, that's definitely going to be a negative for oil. But I think at this stage, there's quite a bit of news propping it up. Rather, we also saw Saudi Arabia coming out this morning, hiking their sort of price that they're selling oil at to their trading partners. So that's also keeping it up. But the commodity complex in general is all trading higher this morning. Gold's also up quite a bit. That's obviously been a good thing for the rand, which is trading at that lower level of that trading range that we've seen for the past couple of months. But I think this war premium might sort of keep oil elevated for some time now.
What we are also expecting this week is to hear a little bit more about the Chinese GDP, Jacobus. This is hard to gauge because the data keeps coming in hot and cold, and so it's really hard. We know in the last quarter they managed to eke out actually 5%, and I'm wondering if we are expecting that to have improved slightly or a bit of a slowdown.
Yeah, so I think at this stage, the expectation is for it to improve slightly, but I think the bigger thing, and that's just sort of what's driving sentiment at this stage, is still the property sector. We saw some numbers out again last week, year over year, property values dropping by 45%, so there's still a lot of pressure in that sector. But, the CCP continues to say that, there is going to be a lot of stimulus, whether it be monetary, fiscal, so they are trying to prop it up a little bit. And we saw President Xi arrive in France this morning, so there's clearly sort of an indication, at least from the Chinese authorities, that they like to get the whole idea behind China, the global sentiment around China up again. The other thing that's still a little bit putting a bit of a brake on the economy is the consumer sentiment. So, once we don't really see that property sector stabilizing, and coupled with that an increase in consumer sentiment in general in China, we won't really see that pop everyone's looking for. But I think a lot of people are actually starting to position themselves for that.
Brilliant, Jacobus. I want to get your stock pick in a bit, but first I'd like us to reflect on counters that have found a favor with your industry peers.
ASML, these are the guys that make the machines that are used to make computer chips. Have a virtual monopoly of the highest end computer chips. You have to have ASML machines. The Chinese, for instance, are only able to make their current highest level machines, or chips rather, using machines that they basically have someone gotten a hand of from ASML. So if we're looking at AI taking off, like we think it is, the last set of, like I said, earnings from every single tech company is pointing to huge spend on AI. Microsoft is talking about $100 billion. Then a lot of that money is going to flow eventually through to ASML. So that's my pick for the week.
a bit of a daring pick. We're going with Alibaba. Stock price has come quite a way off of the pandemic highs. Pandemic highs were north of $300. We're down to around $80 or so. We could come down to around $75. What I like particularly about that is we bounced off of the sort of pandemic lows, and we put a nice low structure around the $60 range. So you do still have downside down to $66, $65 a share there. But I'm seeing a good bounce up from those lows, some sustainability. And if you're going to take a play on China, and I'm looking at the fact that at $80, yeah, again, downside $15 or so, but upside north of 300% if we go anywhere back to where we need to get to. And the company's doing well at the moment. They're always innovating. Jack Ma's endorsed the current management team, so you might see that that brings a bit more stability. The catalyst there is going to be the Chinese government, absolutely. We're under no illusions about that. We know exactly what they're doing, and if they then provide the stimulus that we think that they might provide into the market, or we expect that, you could see that a stock like Alibaba could be consistently running up for a number of years from now. I particularly like that we double bottomed around the $65 range, and we've sort of pushed up from there quite nicely.
All right, Jacobus, let's hear your thoughts on some of those, ASML as well as Alibaba.
Yeah, two very interesting ones. Very much on the different ends of the spectrum with regards to sentiment towards them. ASML obviously very much a momentum trade at this stage, part of the whole AI story, and Alibaba very, very contrarian. And ASML has been an interesting one. We heard Wayne McCurry and David Shapiro last week. Both of them had the one at ASML, the other one at ASMI. But, I think very much the AI thing is obviously here to stay. Things like NVIDIA have run extremely hard. So, starting to look at companies more of the picks and shovels, if you will, the guys that actually manufacture the chips. Great play, and I think that momentum could still carry on for a while. Alibaba, we've been sort of blowing the China horn for quite some time now. It's nice to see that Alibaba, has finally sort of found it, or it looks like it's found a bottom. It's currently trading extremely cheap. It's a great business, very diversified. They are releasing new games. I think the CCP did learn their lesson a little bit with those sort of unexpected internet regulations and online regulations that they put in place a few years ago. So yeah, if I had to choose one, I like going with a contrarian view, and as I mentioned, it seems to have found a base there, Alibaba, at around $60-$65, currently trading a bit higher. So yeah, probably would back that one.
And today, which counter are you going with?
So similar sort of story. Samsung, I think today, recent results that we've seen weren't great. Some of the more cyclical things were a little bit, a bit of a drag on earnings. But I think it's a very nicely diversified company. Strong balance sheet, very high net cash position. Love the brand. I'm a Samsung fan myself. So yeah, currently trading on a forward PE of 14 times. It's quite a bit of a discount to their peers. We saw it sell off a little bit over the past 2 weeks or so. So I think it's a good level to get in again. So Samsung would be my stock pick for today.
Brilliant, Jacobus. Thank you so much for getting this week going for us. It's been a pleasure. That was your midday market update with Jacobus Brink from the Schmidt Family Office.